Hello, my name is Jason Mercer, the Toronto Real Estate Board's Chief Market Analyst. We are now through the first quarter of 2019 and we continue to feel the effects of demand-side policies on home sales. In addition, we continue to suffer from a constrained supply of listings in the Greater Toronto Area. With these broad themes in mind, let's have a look at how market conditions unfolded in March and the first quarter, both for ownership and rental housing. Greater Toronto Area Realtors reported 7,187 residential sales through TREB's MLS system in March 2019. This result was in line with 7,188 sales reported in March 2018. For the first quarter of 2019, sales were down by 1% compared to Q1 2018. While March and Q1 sales remained relatively flat compared to last year, new listings have declined more so than sales. March new listings were down by 5.1% year over year, and Q1 new listings were down by 1.5% year over year. As I alluded to earlier, the OSFI stress test continues to impact homebuyers' ability to qualify for a mortgage. TREB is still arguing that the stress test provisions and mortgage lending guidelines generally, including allowable amortization periods for insured mortgages, should be reviewed. The supply of listings in the GTA also remains a problem. Bringing a greater diversity of ownership and rental housing online, including missing middle home types, should be a priority of all levels of government. Looking forward, TREB is happy to be taking part in the City of Toronto's consultations for the Housing TO 2020 to 2030 Action Plan and will certainly be raising the supply issue during these discussions. While the City of Toronto's recently announced Housing TO Action Plan is exciting and commendable, the recently proposed increase to the municipal land transfer tax on higher-priced properties is problematic. As the recent city budget process showed, the MLTT is not a sustainable revenue source from which to fund municipal programs. On top of this, additional MLTT on higher-priced homes could have a trickle-down effect on the supply of homes throughout the housing price continuum. Turning to housing price now, the MLS Home Price Index composite benchmark was up by 2.6% year over year in March, while the average price for March sales was up by a lesser annual rate of 0.5% to $788,335. The average selling price for Q1 2019 was up by 1.1% year over year. Now, market conditions have remained tight enough to support a moderate pace of price growth. Despite sales being markedly lower than the record levels of 2016 and early 2017, the supply of listings has also receded. This means that in many neighborhoods throughout the GTA, we continue to see competition between buyers for available listings, which provides a level of support for home prices. Now, while trends in ownership housing have always been top of mind, it is important to point out that many people in the GTA also rent. In fact, the demand for rental accommodation continued to increase in the first quarter. Greater Toronto Area Realtors reported 6,646 condominium apartment rental transactions through TREB's MLS system in the first quarter of 2019. This result was up by 7.7% compared to Q1 2018. Rental transactions were up for bachelor, one-bedroom, and two-bedroom apartments. The number of condominium rental apartments listed at some point during the first quarter of 2019 was also up on a year-over-year basis by 22.4%, outstripping the annual growth rate for rental transactions. The average Q1 2019 one-bedroom condominium apartment rent for the GTA as a whole was up by 7.4% to $2,143 compared to the first quarter of 2018. Over the same period, the average two-bedroom condominium apartment rent increased by 6% to $2,811. It makes sense that we continue to see an increase in condominium apartment rentals during the last quarter. The GTA's population continues to grow as people are attracted to the region by its strong economy and diversity. At the same time, it was also good to see an increase in the number of units listed for rent. However, average rents continuing to increase well above the rate of inflation on an annual basis, market conditions clearly remain tight. Development of more rental supply is imperative to the long-term sustainability of the GTA rental market. So we've covered off the ownership and rental markets for the first 3 months of 2019. Now, it'll be very interesting to see how market conditions evolve as we move through the spring, the busiest time of year, when it comes to real estate transactions. Thanks very much, and I look forward to speaking with you again in a month's time.
Brought to you by GTA Realtors.